Okay. All right. Hi, my name is Stephen McQueen with the Financial Literacy Committee, and bad credit can be very expensive. One estimate has a cost as high as $750 a month, which is equivalent to $9,000 a year, or $750,000 over a lifetime. These higher costs are factored into higher interest rates on car loans, mortgage loans, credit cards, insurance costs, lost employment opportunities, higher housing and rental costs, and it can affect your quality of life. So given these statistics, the Financial Literacy Committee wanted to put together a program on understanding your credit. This program was presented to low-income individuals, but it's relevant to all walks of life. So I'd like to share with you how this was last presented at the Women's Bean Project, which I'm not sure if you're all familiar with that, but it's a organization that helps women re-entering the workforce, low-income individuals. So it's presented there to them. The program really has four main sections. It's a credit report review. The second part is a composition of your FICO score. The third part is credit improvement and repair. And then the fourth is ongoing monitoring. This is a very fluid presentation. There's always room for improvement. We're looking for ideas from volunteers, from any of you all, to make it better. I've only presented it once, and so I'm sure it could use a lot of improvement. To begin, we gave the participants the resources they needed to run their free credit report. We gave them the website. It's annualcreditreport.com. We also gave them a telephone number or the mailing address if they wanted to request their report by mail. And then we also told them to be leery of companies that are selling credit reports. You don't need to pay for a credit report. It's free with annualcreditreport.com once per year for all three bureaus. And the credit report is an important part of your financial management program. We told them it's not necessarily fun, but it's necessary. It's kind of like paying bills or setting up a budget. We also discussed at the presentation some of the challenges of running the report. In order to access your credit report from this website, you have to answer some questions to prevent unauthorized access. And some of the questions are, it's information from your credit profile, but we wanted them to be prepared to answer the questions. I remember when my wife and I first got married, I tried to run the reports for both of us, and she wasn't with me at the time, and I couldn't get access to her report because I didn't know some of the answers to the questions. I had to wait till I got her with me. So we wanted them to be aware that they need to have some information and both partners there to get their credit reports. We then ran through the sections of the credit report, and some of the participants had ran their reports, some hadn't, or some had not. And if they hadn't, we gave them the sample credit report that Sandy mentioned. I think you guys have a copy of it in your book. And this part of the session was very interactive. The participants had lots of questions for us. A lot of the questions we could answer. Some of them we couldn't. And that's okay. None of us are experts on credit. We answered the best we could, and we followed up with some of the participants later to answer some of their questions. We probably could have spent the whole session talking about the credit reports, because they definitely had a lot of questions. And one important thing that we wanted to point out to them was that the credit bureaus report information differently, and credit agencies report to the bureaus differently. And so if there's information they think should be there, but it's missing, that really wasn't important. The more important thing is that what is on the report is accurate. So if you think there should be information from some bureau or from some credit agency from a long time ago, and you don't see it, maybe that creditor didn't report to that agency. And so as long as the information that's on your report is accurate, we wanted to make sure that they check that information. That was the main part of that. Next, we talked about the composition of the FICO score. As most of you know, the FICO score is the Fair Isaac Corporation. We wanted to tell them a little bit about how the FICO score is developed. It's kind of a complicated formula. It's fairly top secret, it's well guarded. They do give us a little bit of information on what the 5 main categories are, which are payment history, amounts owed, length of credit history, new credit, types of credit. And there's varying percentages of how those make up your FICO score. But we wanted to give them a little bit of information so they know once they get their score, kind of how that was compiled. We also talked to them about information that's not included in their FICO score. Some of these folks were worried about child or spouse support that had been paid, previous credit counseling, their employer, residence, age, race. None of that information is included in your FICO score. It may be part of your credit profile or your credit report, but it's not part of your FICO score. we talked a little bit about that. And then we also talked about the FICO score ranges. It goes from anywhere from a 300 to 850 are the FICO score categories. We wanted to let them know what's considered a poor score, what's considered a great score, and then once they have their FICO score, they kind of see where they reside. We also gave them some statistics for FICO scores, national averages, information like that. That was kind of interesting to them. We next talked about credit improvement and repair. Improving credit, a lot of these items are obvious to most of us, but they needed reinforcing. So we talked a little bit about running credit reports regularly. That's probably the most important one. Maybe setting up auto payments for your payments so your bills come out automatically. Being careful with cash advances. Not exceeding credit limits. Paying bills on time, of course. And then reviewing your statements carefully and regularly. One important part of our presentation was fixing credit report errors. We wanted to talk to the participants to, first and foremost, to make sure that if they think there's a dispute on their credit report, to make sure that it is, in fact, incorrect. As time goes by, our memory fades. Financial institutions change their names. So if you see something that doesn't look right, make sure it's actually not right before you try and fix it. If there is something incorrect on the report, we told them to request it in writing to the credit bureau and the credit grantor, request a deletion or correction, and we let them know that it can take several months to get it fixed. And then next we talked to them about credit repair companies. This was important to this group of individuals. We gave them a website to assist in choosing a credit counselor, and then we told them to be leery of empty promises from credit counselors who say they can clear up their credit or wipe out all their credit issues. We also gave them some questions to ask of potential counselors, such as what kind of fees they charge, are they licensed, what are their qualifications, how are they compensated. And we also told them to do their own due diligence. Many firms are currently being investigated, so you want to make sure you're working with a reputable firm. So we want to make sure they were good on that. And then we moved on to ongoing monitoring. Kind of the theme of our presentation was the most important part of keeping track of your credit to make sure there's no fraud and make sure everything's accurate is to run your credit report. You can do it free once per year. Once you get doing it, it's just make it a habit doing once a year. So we told them that. It's an important part of their financial management program. There's different strategies. You can run the report all three bureaus at once, or you can run maybe one every 4 months because there's 3 agencies. Kind of keep track of it throughout the year. Doesn't really matter. You can do it either way. And then to keep your reports in a safe place and to compare to prior years. And then after our presentation, some of us from the committee met and we discussed ways to make the presentation better going forward. Some of the ideas we came up with, I think Liz came up with this one as a games with like a wheel spin for FICO scores and prizes. Maybe have some mini tests to determine credit understanding, breakout sessions. And then also, I thought this would be a good one, analysis to visually present the cost of bad credit, kind of show them what they're paying, bad credit versus good credit, what the difference would be. And then maybe a cost analysis of like a rent-to-own place, cash advances and tax refund advances, how much they're paying for those types of services. And that's pretty much the presentation. We look forward, like I said, to hearing suggestions to make it better or to improve it.